You're listening to the Vint Podcast, bringing you expert interviews, alternative market insights, and exclusive access to the world of wine and spirits investing. Enjoy the show.
Hey everyone, welcome back to another episode of the Vint Podcast. My name is Brady, joined as always in studio from across the United States by Billy Galenko. Billy, how are you doing?
Very well, Brady. Thanks for being on the podcast again.
Our intro should automatically introduce us, I think. I feel like I say the same thing every time. Maybe we should start with like a Billy. I don't know.
Yeah, we can definitely mix it up a little bit. I'm pretty excited. For those of you in 2023, you may be able to see us via video. We might be filming these and putting them on YouTube per our head of growth demands or interests. So maybe you'll see us, but I have purchased a new standing desk on wheels that I will be using for future podcasts. So you will have a dynamic background as opposed to my old setting. So that's pretty good.
Nice. I need to get my setup a little bit more posh in here before we put us on video. Yeah. Need to organize the wine bottles the right way, get the right labels facing the camera, that kind of thing.
Yeah. So what can our listeners expect for this podcast today?
Yeah, I think you have a little rant to go on related to sherry. And so interested to hear that. And then later on in the episode, we're chatting with the folks from Altan Insights, which is a research group around alternative assets. They also provide some really great resources on, like I said, a variety of alternative assets like art and wine and cryptocurrency and collectibles, and then some really unique tools like portfolio management tools to their users. So excited to talk with Dylan and Bradley over there. We'll intro them a little bit more formally once we're done. But yeah, they're great folks to have, one in our just alternative asset community, but to have them on the podcast for a second time is a lot of fun. So
yeah, it's nice to be at the stage where we're starting to have returning guests for the podcast. Right. But as you mentioned, yeah, I have a couple small axes to grind with sherry, mainly because I think they're awesome wines and I think they're underappreciated. So just a couple fun facts, because people keep bringing up to me that sherry's, they always say it's too sweet for them. And they think of it as just a dessert wine. And there are styles, PX or Pedro Jimenez and cream sherries that are sweeter. But the core styles are really interesting because they're basically all made from Palomino grape. And then the way that they're made makes drastically different wines. So I just kind of wanted to ramble quickly about those different types of wines. So there's 5 core types of sherry outside of the sweet ones that are like very dry. They're bone dry. There's no sweetness. There could be some perceived sweetness in the form of like glycerol or nuttiness from oxidation, but
these are cooking sherries, right?
Yeah, of course. Yeah,
that's a totally different thing.
Yeah, that's a different thing, okay. And it's just like a fast, quick version. They all start from generally the same base, so it is possible, but. What's interesting to me is I was actually doing some studying for my next upcoming exams, which I'm doing sparkling and fortified exams 2 on the same day. So as part of that research, I was diving deeper into sherry. And I had an interesting quote that I came across that was not only is sherry is dry, but it's one of the driest wines available in the certain styles. So the 2 styles I'm talking about are Fino and Manzanilla. These sherries will look white in the glass. They're not tawny, or they're not closer to brown. That style, there's 3 different styles that can kind of have more color to them. The main one is Oloroso, and in between there's Amontillado and Palo Cortado. They're kind of variations in between Finos and Manzanillas and Olorosos for their own reasons. And we don't have to get into those nuances for now. But basically, the 2 differences between the ones you're going to see the most, Fino and Manzanilla and Oloroso, are they basically make a base wine from the Palomino grape. So it's just a white wine. It's in a very warm climate. So, it gets decently high in alcohol, not that high in acid. So there's not a lot of malic acid that needs to be converted into tartaric or lactic acid. It doesn't go through malolactic fermentation because all of that malic acid is eaten as the alcohol gets higher and the grapes produce sugar rather than more acid. But so these dry wines are basically put into a cask. And if they're going to be a Fino or a Manzanilla, they're fortified only to 15%. So they're bumped up, but it's only to 15% alcohol. Olorosos are fortified to 17%, and this is for a special reason, is because when it's below 16% fortification, they can have this layer of yeast form that they call flor. Flor means flour in Spanish. But what's cool about that is it basically, they're going to fill these the barrels only up like 3/4. So there's all this headroom. And then in the phenos and the manzanillas, this layer of flor forms. And what it does is it blocks out any oxygen from getting into the wines, like at all. And then on the same time, it's, this living yeast. So it's still eating basically nutrients and elements that are in that wine. So it does consume a little bit of alcohol. It does consume all of the glycerol, and it consumes other bits and nutrients in the wine. So what's really interesting, and this is called biological aging, is that wine's basically protected from the outside world as long as it, exists. So they'll go through their process of aging individual barrels, and then they'll put them into what's called the Solera system, where they kind of, merge with other wines and from different vintages and kind of get down into a single bottling. Some of those systems are a little less long or intensive for phenos and manzanillas. So basically what you get from a pheno and a manzanilla is these white wines that are about 15%. They're so dry because not only do they have no sugar, but all the glycerol and I've said that a couple of times now. The glycerol is what kind of gives you that thicker mouth feel in some wines. It can come from higher alcohol wines, but it makes your mouth, like when people say it's a fuller bodied white, think of like a really ripe Chardonnay, maybe. They tend to have higher glycerol. You kind of just feel it around your mouth a little bit more. Maybe like a really ripe Viognier has decent glycerol. So this is basically on your palate as dry as it can be. And another person I heard on a podcast recently was mentioning how phenos and manzanillas, the difference between phenos and manzanillas is manzanilla is grown in a place called, or not grown, it's produced, basically vinified in a place called Paramita de Sanlúcar. I might be mangling that a little bit, but basically this little town right by the coast. Otherwise, it's exactly the same as a pheno. It's made in the same way. And people will call them salty. And sometimes as a tasting note, and they're like, oh, it's from the ocean breezes, and that makes it salty. But the interesting expert that I kind of heard the other day pointed out that it's really because they're so dry, there's such an absence of that mouthfeel or sweetness that they come off your palate as being perceived as kind of salty. And the other thing that they're also lacking is acetic acid, acetic. Why am I thinking this? Volatile acidity. Yeah, acetic acid. And that is something that also means it pairs very well with meals that have vinegar in them because there's no acetic acid competing back and forth. So
notoriously difficult kind of food to pair with.
Exactly. Because if you have a vinegary salad, it basically kills say you have a Sauvignon Blanc. It basically makes that one seem not acidic and you're just left. So that was a really technical way of me rambling about a certain type of sherry, but both phenos and Oloroso styles are basically the best food wines possible, and they're made for food. They're not made for just sitting on their own. So some people, they can kind of be considered austere on their own because they are so dry, actually. But I encourage everybody to go explore sherries, ask people about them, ask your local wine shop, because they're so affordable. There's so much that goes into making them, from the winery to the years in the barrels to the Solera systems. There's a lot of time and effort, and you can end up finding them super cheap. So I think there's some of the best value wines out there and perfect for food.
Yeah, and related to your Sauvignon Blanc with a vinegary salad, isn't it true that Sauvignon Blanc without acid is pointless?
Yeah, according to that, our buddy Nick Jackson said that a while back.
Yeah.
That said, the greenness and leafiness in some Sauvignon Blancs do make them good salad companions. Just be conscious of the dressing you're putting on.
Just your creamy dressings, maybe.
Yeah, I mean, it could be vinegary. Just don't overwhelm yourself with just straight vinegar.
Yeah. Well, hopefully that will spur on some love for sherry and just fortified wines generally this holiday season, which is a great time to get into them when you're drinking maybe your brandies and other things like that.
Yeah, it's just not for dessert. Keep an open mind. Pair with them. Same with champagne and sparkling.
Super versatile.
Use them outside
Madeira
of
Madeira too.
Mm-hmm. Yeah.
So. Well, to get into our interviews today, like I said, we have Altan Insights on in the form of Dylan Dietrich and Bradley Calleja, both of whom work in research side of the business, and they have a lot of really great insights to share about the alternative asset markets generally, about kind of our macro environment that we're in, and a few updates to share on new features and that they have on their platform and what they're looking forward to in 2023 in terms of serving our community. So hope you enjoy this conversation. Certainly reach out to us if you'd like to get connected with Bradley and Dylan, and we look forward to hearing from y'all soon. Hey guys, thanks so much for joining us today. Really excited to be back on, second time on the Vint podcast.
Thanks for having us back.
Yeah, thank you.
Yeah, Dylan, do you maybe want to give our audience, we've already kind of introed you guys, but do you want to give sort of the higher level or maybe more in the weeds overview of what Altan does and how you guys serve alternative investors?
Yeah, of course. So back in kind of the spring of 2020, when this idea of fractionalizing alternative assets was becoming more popular and prevalent, our founder, Russ, noticed that there was really no third-party source of data and insights and research to kind of guide investors as they were diving into this space. And so that's kind of how the idea for Altan was born. And since then, the team has grown to support, at first fractional investors in a variety of ways, whether that's allowing them to kind of have a consolidated view of their different fractional investments and track their portfolio, or new assets to invest in, understand how they perform and how the broader markets are performing, and then providing kind of research to go along with all of that and to better explain kind of market dynamics. And that's kind of evolved a little bit over the last year or so, where what started as a focus in fractional has really broadened to making more of an effort to understand these different asset markets more broadly and to be of service and value to anybody who's collecting in these spaces, in terms of really trying to wrap your arms around different market dynamics, how things are performing, what's overvalued or appears to be, things of that nature.
Yeah, and we've had kind of a crazy year in the public markets generally, obviously, moving into recession and these kinds of things. S&P, NASDAQ down. Alternative assets I'm certainly seeing conversation online about moving to physical assets. So we want to kind of use this conversation as maybe a year in review, sort of, in terms of your guys' learnings over the last year. I wanted to ask you, Bradley, kind of what's been the focal point, if you want to divide the year in two different halves, maybe like the first half of 2022, the second half, what have kind of been the things that have stood out to you in terms of focuses in the marketplace?
Yeah, so this has definitely been a year where we're seeing, and it's been across the board. We cover, as mentioned, everything from wine, art, to sports collectibles and memorabilia. And it's really this year, to sum it up in a sentence, it would be like it's the haves and the have-nots. It's the separation between the highest end of the market and quality versus what we saw in the days coming out of COVID, where basically every asset out there was rising. And that was clearly unsustainable. Like, I think everybody knew that. One of the areas, though, where in wine and in the fine art market that we're seeing, and also in some of the sports things that we can also touch on, memorabilia especially, is the highest end of those markets are having record-breaking runs still that have continued. And it's probably a good thing in the long run to see that maybe there's some sanity re-entering the market. But yeah, we saw, in sports memorabilia, record-breaking sale, really after record-breaking sale across multiple sports. Boxing had a Muhammad Ali belt, set an all-time record. Golf had a set of irons from Tiger Woods go for over $5 million. Did the Michael Jordan jersey go for over $10 million? And then also coming in was obviously that Mickey Mantle card that went for over $12 million. And those are the highest end items in their respective fields. And we continue to see that in the wine markets as well, where you're now seeing very specifically maybe DRC or your highest end of champagne really carrying those markets, where at the lower end, a lot of the wine values have somewhat maybe pulled back, or at least they're stable. And so it's definitely been a market that's targeting the highest quality items out there for sure.
Yeah, on that front, how do some of the items, and I guess this might be showing some of my ignorance on like the sneaker space, but the items that have like a generally lower cap, things that aren't getting into the like tens of thousands, hundreds of thousands per unit item, like how is that impacting some of the other categories that maybe have a little more of a cap in terms of their price point?
Yeah, I think those categories have, whether it's a factor of their, market cap or not, have generally fared worse. I think some of that has to do with, that lower entry point and that greater degree of accessibility can lead to a greater degree of speculative activity. And so in areas that are not at the peak of the sports card market, in the sneaker market across the board, trading cards, NFTs, video games, you saw assets that were kind of maybe more accessible and kind of maybe led the charge upwards really pull back very, very swiftly when kind of speculation fell out of vogue, with the Fed raising rates and just the monetary environment becoming much tighter. All of those things kind of really fell out of vogue at the same time. And to a similar degree as well, pullbacks in the 25 to, call it 40% range, higher in some cases, not uncommon at all.
Yeah, that makes a lot of sense. I fell into the speculative nature when it came to kind of like April, I guess it was March, for the Air King. So I got on the watch train a while back, and then I really thought they were going to discontinue the Air King, and it turns out like a ton of people did. So the speculation there, and I was like, oh man. So it's kind of funny with some of those, especially like I was the epitome of some people who are just getting into some of these spaces, not necessarily doing all of their research and being like, oh, I got this, and let me just like put money in and then be like,
I think that's a good point too, because I think a lot of the categories that have had the hardest time saw a lot of kind of quote unquote tourist activity, where people were getting in and perhaps with the intention of being long term, but once the market starts heading in the other direction, it's like, maybe I was short term after all, and maybe this isn't kind of a long term venture for me. And I think that's also another place where you see differences in performance between categories, where categories like art and wine have held up very well, because I think the amount of tourist activity in those categories is far less than it is in some of the other more speculative arenas we've seen.
Yeah, when you have folks that use your resources or use your portfolio manager, and what are you hearing from investors when they kind of come inbound to you guys and ask your perspective, where you speak with them one-to-one, they reach out? What are some of the questions that people are asking you maybe in the last 2 quarters, and has that changed over 2022? Are people looking for different kinds of resources, or what's that conversation been like?
Yeah, I think.
Yeah, go ahead, Bradley. Sorry.
Just real quick, we started doing our research reports this year, where we're targeting asset classes ranging from an art report, sports collectibles, and then also like a briefing just on the general market, where we include features on wine. And I think those have become serious reading for a lot of people that we are a community, because again, going back to, it was so easy basically to make money. The money was very cheap. It was, there was any opportunity out there. If you threw something at it, things were going up. We saw everything from, sports cards and video games across the board were just rising, comic books. And then, as the markets tightened, we produce, the research that, we put together on either a quarterly or period basis. And now it's definitely being received. And I feel like it's great for us as a company that obviously looks a lot more in depth to these asset classes and these topics. Now, people are definitely looking for advice, or they're looking for just the analysis on these asset classes, as before it definitely wasn't that way.
I think it also brings into kind of the forefront of focus, like, what are the historical precedents? Like, what does historical track record look like in some of these categories? Because I think it was natural for most, if not all, investors over the last 2 years to be very zoomed in and look and having, a pretty intense recency bias. I think that's human, and that's kind of the way things go. But now that we're entering this new environment where not everything is going up, it's like, okay, let's take a step back and better understand, like, how does X category perform in X environment where inflation is roaring and the Fed's raising rates, and how does that affect things, and like, should we be expecting correlations to equity and bond markets to be low? And those weren't really the questions that are top of mind for people when things are going straight up.
Yeah, I think we saw that like in the mortgage market, right? People are like, 4.5%. This is ridiculous. Who would buy a house at 4.5%? And it's like, that's actually like, well below average historically. and even low relative to even the most recent 5 to 6, 7 years. This isn't, this isn't even new in the last decade. So yeah, definitely that. I think that permeated a lot of different markets. It's a thesis that we had too. I think, even from the onset of our business in terms of like the way that we were modeling the markets, we recognized pretty early on that the most expensive assets, returned the best, had the best return profiles. So I think operating in that top, 0.5%, 0.1% of the market is, that sounds like based on what you guys are saying, that holds true across all of these different categories.
And along those lines as well, I think I would look for that as we kind of continue. I just think that market, we're getting out of the fall art season. Obviously, we have some wine auctions that always come up in December. And I think that trend is just going to be one that continues, because at this point, it's now, I think people are going to really start being a lot more selective in where they put their money towards, as opposed to even in recent months. I still think that there were some assets doing a little better than you could argue maybe they should have. So I think over the next few months, you're just going to see people continue to kind of cover, themselves and make sure that they have, they're diversified, but they're also going to make sure that they're comfortable. So yeah, the targeting of the high end is just going to be a trend I think that we'll definitely see continue there.
Are you seeing any assets that really touted themselves as not really correlated to the markets, kind of following it a bit more closely than you would have expected? I think wine is staying on kind of its track, its traditional track of not being very correlated, but like crypto, for example, it touted itself back in the day as not correlated. Now it's just like, but the market does, but like 10 times either direction. So it's like, what are you guys seeing on your side there?
It's hard, right? Because like wine is definitely an exception. I think art's been an exception, but like most assets, this is a rare year where both bonds and stocks are getting pummeled, like both parts of a 60-40 portfolio are under the same stress. And I think, really most assets are experiencing the same turmoil across the board. So short term, all of a sudden, like correlation's very high at the exact moment you wouldn't want it to be high. Obviously, you mentioned crypto and Bitcoin plummeted with, inflation peaking, and you hear the arguments that it's kind of like a forward-looking hedge on inflation, and to each their own on whether or not that's the way they want to view it. But I think it's been a challenging moment just because in the short term correlations are so high for most assets, but and that matters. I mean, I think generally you want to measure it over a longer time period, but if kind of all of your assets are going south at the same time, that's certainly less than ideal.
That's, mainly related to the like short-term macro environment. That was was that kind of your thesis and explanation for most of these assets?
Right. And I think, so many of them were such beneficiaries of the exact environment that we no longer have, where money is no longer cheap, and the Fed is very committed to kind of stifling inflation, which threatens to stifle, economic growth. It's funny, even if you look at kind of historical performance for the art market, there's the saying a lot of times, like the stock market isn't the economy. So, the economy might be in a recession, but the stock market's, looking forward, and it's actually moving ahead in some cases. And the art market actually has more closely tracked, GDP and economic growth than it has kind of, equity sentiment or things of that nature. So, a situation where economic growth is being threatened by monetary policy is a challenging one, I think, for art and assets like it that are trying to kind of emulate that historical track record.
That's interesting. Definitely. I think on that note, it's interesting to talk about like maybe the different dynamics of these assets, and maybe let's dive a little bit more into whiskey and wine and what you guys are kind of seeing from that point, because as a consumable, it is kind of a unique asset in that class, and also as something that is quote unquote improving over time, depending on if it's a whiskey in cask or like wine in bottle. Can you tell us what you guys are kind of seeing in this macro scale now?
Yeah, definitely. Wine and whiskey is still, I won't say early, because there is data out there, but in terms of like, there's definitely a lot more long-term data and just a lot more volume front with wine to be able to I think accurately say that it is very uncorrelated to the market. One of the big characteristics that is different than most alt asset classes is the inconsistencies within wine and whiskey markets. And that can, I think, maybe be a negative word, but it's a positive as an investor. Right? You have inconsistencies in yields, you have inconsistencies in quality, in taste, in ratings, and all of that plays such a role in, I think I'm interested in seeing even more research, and some of that may be coming from Altan on like when we start to see a rating come out, how that really does impact, and if we see any within the market, if we start to see any consistencies, or if we start to see things match up. If one wine has a 98 versus a 99 or 100 one year, is the 99 or 100 going to always outperform the 98 across producers? But and whiskey is really that same way, where I think that there are maybe factors in terms of climate and the changing and the yield differences that maybe don't impact whiskey quite as severely as the wine markets. But that's definitely where you have, and then also I think one of the other big qualities with those is similar to the fine art market and also the highest end of the card and memorabilia markets, is once you get that, I guess you would call it like your top end or your grail of a wine or of a whiskey, or you have something that the market has determined to be the best of the best. It only comes publicly out there once or twice every couple decades. This is not liquidated literally as much as an asset like we talk about, like Michael Jordan's rookie cards. There's one in every sports auction, and so that's these markets they are incredibly unique. And for wine and whiskey in particular, there are just these external factors, and I didn't even touch on the ones like tariffs and just global factors that influence prices. So yeah, definitely a market that has a lot of things influencing it beyond just the standard auctions.
Yeah, I just add too, it's like obviously consumption is such a big factor in both markets, and that's not the kind of thing that slows down in this type of market because of who those asset classes cater to, right? There are occasions and gifting and reasons for consumption that persist pretty much regardless of economic circumstance because of the specific clientele. And that, again, is a pretty unique aspect of those markets that provides some protection where others just don't have it at all.
And consumer and collector interest, like how it may increase or decrease, is interesting too. You were talking about maybe auctions. Auctions are a little bit less on our radar just because of maybe questions of provenance and these kinds of things that could come up. So if a particular wine becomes more interesting, or you see more supply of it on like the auction circuit, it might actually mean that there's less supply available within like the investor circles. And so that might play a factor, probably with wine more so than whiskey, because whiskey doesn't have some of those same considerations. But yeah, I like the parallels between thinking about the auction market and then thinking about like the highest provenance investor markets.
I also like how you were saying when I like this happened, actually came up when I was over at Thanksgiving. Basically, I had a few uncles be like, well, this recession's coming and what have you, and people aren't going to be drinking maybe that highest end wine. And I was like, well, the people who are actually most recession proof are the people who can afford to drink DRC on a regular basis. So they're not going to really cut down on their exorbitant consumption. But something on a different vein, I guess similar vein but different side of the coin, is on the whiskey front. I'd be interested to hear your guys' thoughts a little bit more on this, because once it is bottled, it won't necessarily, it's kind of like a time capsule. It won't really change in the bottle. There's less consumption overall. It's more one of those things people hold up and either try to complete a whole collection or put it out for people to see. How are you seeing as, well, I guess, right, my main question kind of comes from the fact that there was not necessarily artificial, but natural lack of supply, just because the waves that we've seen in single malt production over the years, there wasn't a ton. And now that everybody's like, cool, the money's here, it seems the demand's here to stay since the early 2000s, really, in single malt. Now that more supply is coming online, how are you seeing people kind of flock to either like the collectible bottlings, or is it more the aged bottlings that are like 50 plus years old that are drawing attraction? Like, are you seeing any trends on that front?
Yeah, I mean, definitely, it's a market that in the early days, when it, I think, first became an alternative asset class and really is making the auction headlines, it was super dominated on the Asian markets. We're very drawn to your highest end, your Macallans, your single malts from Speyside and those. And in terms of like the bottling, and I haven't seen enough on that front to say that, design or anything along those lines is really driving prices, but it definitely fit into that luxury mold really quickly, where we see it with everything from handbags and watches to fine art, where if you are an established name in whiskey's case, in the hills of Scotland, like if you can really establish yourself as that luxury brand and it's the name, I just think that people are buying. And I don't even know how much it is. Obviously, on a record front, we see years and time, in cask influencing prices, but just on a broader scale at auction, especially now, things have toned maybe a little bit down, but in these early auctions, it was like there was nowhere near enough quantity of, just taking as an example, like Macallan hitting those markets to meet the demand in Asia. And that's spilled over into the United States as well over time, but it's still lagging significantly. And what's been really amazing about that, just like one more point, has been how much pressure has been on those markets, from instability in Hong Kong to the zero kind of COVID policies that have been in place. And it's been pretty amazing between whiskey and champagne, to me, how well those markets have withstood, considering the amount of pressure and probably bearishness that reasonably could have been on them. But yeah, at the high end, it's all about the name. And if you have an established brand, just as an example, again, the Macallan, that's always really going to be fetching a fair price. It's like a Monet or a Van Gogh, basically, on these markets.
Yeah, I think it's a really interesting example there too, because champagne and whiskey are on like polar ends of the consumption scale. Like champagne, even the more expensive ones are more readily consumed. And like Dom, for example, there's a fair bit of that produced every year, Dom Perignon. But on the whiskey side, yeah, it has been interesting. And that's kind of where my interest is in the category. And we've seen this a little bit in the cask that we were able to exit at, over about like a 29% return for our investors. Is there's just not enough old whiskey coming around, and you can't make more old whiskey quickly. Like you still need to wait 10 more years before your 8-year-old whiskey right now is an 18-year-old. So I think it's going to be interesting to track how that continues to evolve as a little bit more inventory comes online each year, and maybe different producers, and then how maybe some of those closed distilleries like Karazawa may maintain their certain level, because there's literally can never be any more produced.
And I think questions around supply are fair in any market like this, where it's not like it's a brand new collecting market by any means, right? But the performance numbers have been so strong in recent years that it draws new people to the space. It draws new businesses to the space. There's more auction events. There's more channels where sales are taking place. And I think, over time that there can be fatigue for certain producers or certain bottlings, and that show up very frequently. And there becomes a separation, as we've alluded to in all of the markets, between the best of the best, the stuff that can't be replaced, that isn't available all that often, and the stuff that does show up at every single auction event.
Dylan, I wanted to pivot a little bit to talk about your guys' platform and some of the changes or maybe additions that you guys have made over the last year, or really, I guess, since we talked. I'm trying to think, was it February last year, or was it in 2021 that we spoke last?
It was early 22. I think that's
okay.
Right.
Well, since then, you want to talk a little bit about some of the moves that Altan has made in terms of product offerings and services and resources, and just how you guys are serving investors right now.
Yeah, I think as Bradley alluded to earlier, a big effort, at least on our front this year from a research perspective, has been providing more resources on broader markets, whether that's sports, whether that's art, or whether that's providing intel basically across markets in kind of short form, fact sheet format. It's not something that in markets other than art in wine and spirits that exists to a very large extent, where people are thinking about these things from an asset class perspective and trying to provide thought leadership in terms of, what areas of the market are performing well and why. So that's a very kind of new pursuit for a lot of categories. And so that's been a big focus for us this year. And in addition, in the background, I think we're continuing to fortify our kind of repository of data, so to speak. And more to come on this in 2023, a lot more to come on this in 2023. But we want to be able to provide collectors and investors with as replete a data source across alternative asset categories as possible to continue to better understand these markets and the assets within them, the kind of subcategories within them, how they differ in composition, how they differ in market performance. And so a lot of work being done on that front. There's quite a bit of data out there, and it's just incredibly fragmented. None of it looks the same. None of it, behaves the same. So a lot more to be done from us on that front, but continue in the meantime to expect, tools for fractional investors and research for collectors and fractional investors across all these categories.
And in terms of your portfolio product, you do offer a product for people to kind of aggregate and view all of their alternative asset holdings in one place. Has that evolved over this past year? How has that? Have you seen a lot of feedback for people wanting more of those kinds of services? And who you guys are building that, but what kind of advances are being made?
Yeah, we're trying to replace spreadsheets. So every time we see a fractional investor on Twitter sharing their spreadsheet of investments across different platforms, we're trying to get them onto the portfolio manager on our site. And one of the big points of demand has been for more automated syncing, which we have made some advances on and are hoping to do a lot more of. I think it's challenging because all of the fractional marketplaces themselves, as you well know, are growing and have all sorts of tech initiatives to pursue, but the more automated syncing to allow users to be able to more easily kind of plug their holdings into a consolidated portfolio manager and understand things is something that we continue to try and move the ball forward on. But we've certainly made some strides on that front and made some strides in terms of how frequently pricing data is becoming available for that portfolio manager. So each day at the close of trading, the next day you have fresh market values in there and can really understand pretty close to real time how your portfolio composition is changing.
Yeah, I can only imagine how difficult that might be because we're constantly working on updating our portfolio information. So if you have to work with a lot of startups like us who are working on their own stuff, then I can only imagine.
Exactly. There's plenty to keep all of us busy.
Is there a big need for more collaboration between you guys who are maybe more of an aggregator and a research and resource hub between all the other alternative asset platforms? Or do you feel like you can provide, this portfolio view, aggregated portfolio view outside of more collaboration? Is there a need for that?
It's always helpful when there's more collaboration. I think the capability is there to do a lot without it. And from a research perspective, there's certainly a lot that we're able to cobble together from, third-party sources and otherwise to kind of glean insights that you might not otherwise find. Because I think that's the biggest challenge of the space is all the information, most of the information is out there somewhere, but you have to go to 12 different sources and make sense of them separately and kind of tie them together. Just kind of the value we're adding with our research is kind of doing that traveling and bridging that divide, but always easier when things are collaborative. And we found that most kind of parties in the space are quite willing to be collaborative because I think we're, providing insights and shedding light on these markets in a unique way that only serves to educate people better and help them better understand what they're allocating capital to.
Awesome. So now that we kind of have a sense of what you guys are going to be doing in 2023, are there what are you looking forward to? Now that this year is kind of wrapping in terms of new asset classes or potential developments, what do you guys have your eyes on for 2023?
Yeah, I think just obviously there's a side of it that's the continuation of what we're seeing now, which is the high end and the quality items getting probably the respect that they deserve. And I also think there's going to be some categories and some areas that continue to emerge. On a wine front, I continue to kind of hold out and wait on the Northwest region of the United States to kind of start to challenge California a little bit more on an investment side with wine. I know the money that's being pumped in over there to grow that region and to really develop it as a major player in the wine world. And it's also being aided by temperature issues down in Napa and Sonoma. And then on a whiskey front, I just think it's really going to be about more consistency and more data coming through. That's the stuff that we're super interested in, kind of geek out on. And so that it's a market that, it's been around. It's nothing new, but I still think that there's just so much we can learn between the buyer habits, how the market's going to really hold up long term, whether it's distillers or if it's certain ages are going to separate themselves as truly investment grade versus just a really great high end collectible. So yeah, that's probably all we're looking at. And then I think outside of maybe the liquid asset space, I am pretty excited to see the photography market develop. We started to see that a little bit in the art world at the end of, or actually in the spring and fall seasons. We had actually the top 2 photograph sales ever. One was the Flatiron in New York. It was a photograph taken in the 30s, I believe. And then earlier in the year, Man Ray had a photograph that is currently the record holder. Both went for more than $11 million. And I think that that's going to be an area that, as we look at like art pieces that are becoming the central feature in someone's house or in a gallery, we're going to start to see photographs as they kind of, the industry and taste shifts towards kind of a more modern appeal, are really going to be more accepted. And so that's the one area outside of the wine and whiskey world that I'm looking forward to seeing grow in 2023 and beyond.
Are you looking at, like, when it goes to photographs, does it go all the way back to like our daguerreotypes or like really 1800s photographs like valued, or is it like the artist, the photographer meets like really nicely preserved, larger developed pieces?
Yeah, I think really a combination there of both. So I believe that we're going to see, I also think like sports photographs are an area where you have there's fun images of like the famous Ruth bows out. And one of the issues with some of those are they're not really presentable in a lot of ways. So I think we'll see maybe those develop a little bit where maybe they're built out on canvases and they're not maybe an original print, or even as they're actually, some photographs are graded. So like they get a type 1 if it's an original that was produced within 2 years of the photo being taken. So that's just where I am. I think it's going to be a combination. I think you're going to see like photographs that were featured in Time magazine and things like that. When you have those originals start to emerge out in the public sphere over time, I just think tastes are going to evolve maybe away from some of the masters style artworks, and people are going to favor photographs that can kind of fit the mold for a gallery or for someone's interior design look.
Yeah, I know Brady probably wants to hop in here, but I just have to note that when you were talking about the wine and whiskey side of things, you did mention like liquidating some assets sometimes. And then when you started with the photography, you said you want to see how it develops. So I really like how you've been easing these things in there.
Puns all around. Yep.
Maybe that's a service you guys can add to your
the puns are free.
Yeah,
the puns are free. Don't worry. Not for the puns. Stay for the
not
research.
Not going to build an agency. Not going to build an agency. So then maybe let's go out to macro for 2023. I mean, everyone wants to guess and be right, and we'll probably all be wrong. But what are the things that are motivating the steps you guys plan to take in 2023? Things that you're focusing on related to macro. What are the motivating factors?
Yeah, I mean, I think it's pretty simple, and it's a lot of the same things that investors in more traditional markets are waiting on. And I think it certainly feels like we're in for a continued kind of challenging stretch, because I think the first place you look is the Fed and what they plan to do, and all indications are that they're keen to persist with monetary tightening. They're keen to persist with raising rates. signs have started to flip a little bit, but not in such a persistent way that they'd be encouraged to take their foot off the gas and kind of reverse some of their plans. So I think until that changes, and there's no reason to believe it'll be in the next couple of months, I think there's probably some more pain ahead in a lot of the categories that we cover. Looking beyond that, though, I think for me, I'm very excited to see that once the dust settles, once this kind of great reset has unfolded, what are we left with? Because undoubtedly, so many of these categories do have larger audiences than they did pre-2020 that are going to be around for the long term. And so, what do those audiences look like when the dust settles and things are a little less tight? And what does demand look like in which categories have kind of carved out, more sustainable, long-term kind of fruitful outlooks. So I think that'll be really, really interesting to watch as it unfolds and to see which ones may have kind of blown the opportunity for the foreseeable future.
If we get some stabilization or maybe a little bit of an uptrend into like the start of 2023, do you anticipate that funds will start to maybe move out of some of those public equities that were down into these alternative assets, or do you think that maybe a lot of that shakeout has already happened?
I think there's a possibility for some rotation, but I think it'll look different than the way the markets went up in 2020 and 2021. Not to beat a dead horse, but I think quality over quantity is going to remain a key point of emphasis. I don't think a rising tide is going to lift all boats this time around. I think people have learned some lessons and learned to be a bit more discerning in terms of, which assets in these categories are kind of all-weather assets and which ones, have audiences that are around for the long term and where there will be a willing buyer in a variety of market conditions. So I think it'll look different, but I think all signs point to there being, perhaps easier and more intuitive ways for mainstream investors to access these assets that maybe don't require so much kind of research and information day to day on specific assets, but the ability to just gain exposure thematically seems like that's somewhere the industry is heading in a lot of these categories. So, I think there'll be a lot of interesting insights to glean from that data.
You guys still run into many people leery of alts as a category because all they think of alternative assets is crypto, or?
Yeah, and I know Dylan's really leading that charge to get this sector renamed so that we can separate from maybe some of the more traditional alternative assets and also maybe away from cryptocurrencies. But yeah, and I think obviously there are some markets that are impacted a lot more, looking at NFTs and maybe even digital art that also pretends to be NFTs as well. But yeah, it's definitely, and it's understandable. I mean, I think a lot of that stuff was already very confusing and maybe had a layer of, I don't know if scam is the proper word to throw out in all cases, but there was definitely a lot of people making a lot of money that could pull the rug at any time. And that basically happened across a lot of sectors there. So yeah, no doubt. And I think that, and it always just hurts the sector in general, but I still think the adoption is so early that the high-end investor who's really into wine or really into art, they've weathered these storms. They've been around for years, or hopefully they're reading the research that we put out so that they know what the market's been like for years and can still feel comfortable putting, their money into some of these asset classes that are established.
Yeah, one thing that I think is so important to understand, it's not just NFTs, but across so many of these alternative asset categories, the last 2 years have kind of created, this very short-term orientation. And it's kind of like the worst of some of these assets in many ways where there can be a boom and bust nature. But when you kind of zoom out and look historically, like in a lot of these assets, the money is made over the very long term. It's not the quick flips. It's not the projects or the assets that suddenly become very popular and go up, 30-40% in a few months. It's buying blue chip assets and holding them for a long time. And that's where not only are you achieving returns, but you're doing so in a way that is less correlated to other asset classes, where the risk is lower, where the volatility is lower, and kind of the worst parts of investor psychology are removed from the equation. So I think it's definitely going to be a challenge for a lot of people who were introduced to these categories over the last 2 years to kind of reset and break that very short-term orientation. But I think it's necessary, and it's a healthier way to kind of approach these spaces.
Yeah, I definitely see where you're saying with that. I also think on the crypto side, what is interesting is I'm a crypto believer. I do have enough of my portfolio, but not in the speculative sense. I've been in this for over half a decade now. And I think the weird part about that is it's been so public, the development. It's like it's really this technology that's going to be evolve over time and potentially add value to the world and the ecosystem. But it's been so publicly being developed that people are getting in and out, and they're like, oh, it's not working. Like, give me 10, 15 years down the line, then we'll see where we're at with like actual crypto and the use of the technology. That's, I think, where the true value is going to come out, and people conflating it with some of these assets that are, have been around for decades and are showing, consistent performance. I think they're just two completely different things, and people tried to lump them all together. And I think that's just kind of crazy. So I think what you're saying is kind of spot on, just looking at that longer term kind of runway and even historical data for that matter.
Well, Bitcoin, you would put Bitcoin and Ethereum into those like blue chip assets of that category there. Would you not?
Yeah, for that category, maybe, but I still think they're still proving out their use cases and what their true value may or may not be, rather than what their stated use case is. I think that's going to continue to evolve as well. I don't know what you guys have to say on that one, but that's my point of view.
Yeah, I think you're right that the fact that the ecosystem is built in public and that there's so much attention on it is probably counterproductive in some ways. And I think that too lends itself to a very short-term orientation, and the crypto space is going to be in for some more hard months ahead. Then you look at things that are happening that might be more bullish for the long term. The fact that, ledger wallets are suddenly having like record sales because people are understanding the value of custodying their own crypto in the midst of the disaster that is FTX, and so you start to think about like longer term, what the value proposition was intended to be, and how different it is from where it kind of went over the last few years, where everything kind of did become very institutionalized, and like we're putting leverage on things that shouldn't be levered up. And it's just kind of like rehashing all of the mistakes that the traditional financial system has made over the years.
Yeah, the cold wallet, I think that's a good flag, because that seems to indicate that the response that people are having isn't crypto is bad. It's they're able to separate the institutions, the centralized institutions that are handling it, and the actual cryptocurrency space, which I think is important.
Exactly. It wasn't a crypto problem. It was a corporate governance issue.
Yeah.
So
I think the question is like, will people broadly see it as such, or will they see it as a crypto problem? So
it's a pretty tough reputational one to bounce back from for the mainstream public, right? But I think it takes it's tough in the moment for those who haven't been involved in the space or have been skeptical of the space to look at this as anything other than kind of an I told you so moment, which certainly isn't unfair, right? But I think there are counterpoints to be made as well.
Well, thank you guys so much. Yeah, really appreciate your time, both in talking about what you guys are working on, but also just so much market insight. So we'd love to have you back next year, and we'll maybe continue to do this.
Can't wait. We'll be here.
Awesome. Right, thank you guys.
Yep. Bye-bye.
All right. Well, that was our interview with Bradley and Dylan from Altan Insights. I hope you all enjoyed that as much as I did and learned a fair bit about the macro alternative market, as well as the wine and spirit space. I'm really excited to see what the macro kind of alt space looks like in 2023 and how it evolves in the current economic conditions. But we do know one thing: we're very excited about what the wine and spirits prospects hold. And I encourage everyone to go to Altan Insights to leverage their reports, their tools. It's very handy for both managing your alternative portfolios as well as learning about the market as a whole. On the Vint side of things, we'll be back next week with another episode of the Vint podcast, and we will have some updates for you very soon on collections. I know everybody's anxiously waiting, and we hope to be able to share those probably on the episode next week, if not very soon after. So have a great rest of your week. Cheers.